Larry Shover, who joins us from Efficient Capital Management. Larry, can bring you in on that QE3 discussion as well. I've already had a number of guests this morning saying this economy isn't strong enough, and basically without these equity markets getting more support, the Fed's got nothing. It needs to kind of add something or give something extra, particularly perhaps when Washington's kind of hamstrung with its own debt problems. What do you think? Do we get QE3, or maybe we don't call it that? Do we get something else?
You know, I like what Greg said, like QE light or QE 2.5, something like that. I wish Bernake would have vocalized this, that his reinvestment strategy, something like maybe taking the principal of their mortgages and applying it to 10-year, moving out the yield curve a little bit, showing the broader market that he's willing to tamp inflation, just showing something, some credible evidence. And I think that's why we had that sell-off, because, again, it was very evasive. But they will take the reinvestment and put it out in the curve somewhere.
People are trying to get clarity on what all of these statements like extended period and others mean when the Fed speaks about it. I guess he said, you know, that they're not trying to be intentionally opaque. It's just that they don't know. What else did you kind of hope to get from the Fed Reserve, or hope that they'd offer a bit more of today?
I was hoping for direct milestones. Like, we'll keep the accommodative practices in place until such a point when we get this target inflation number or CPI or GDP or anything. It just seemed like a replay from a few weeks ago, and I think that was disappointing to the markets because we were looking for just detail. That's all it would have taken, is detail.
When do you think you'll get it? Because Alan Valdez, we spoke with him from the floor of the New York Stock Exchange earlier. He reckons August you get the Jackson Hole Symposium again, which was where this QE program was announced. He said that's when they'll announce another QE3. But do you think that's a potential platform for more information?
Perhaps, but I really don't think there's going to be a QE3. Perhaps, though, to answer your question, he will have a platform to be a little bit more definitive, but I do think he believes that the commodity problem, the price of oil, all that sort of thing, it's starting to roll over, and perhaps the economy will start to recover. But as Greg said earlier, anything with a 2% around it, it's pretty scary right now, and we'll have to see. But do keep in mind that when QE2 started, oil was $75 a barrel U.S., and even now it's up in the 90s. It has come off a bit, but it's still much higher than when we started.
Hey, Larry, I mean, you're sitting in the home of the bond market there in Chicago, and what is, you know, you heard my comments. I think the states really can't raise interest rates significantly to 2013. What is bond futures talking about interest rates in the states, you know, looking 12 to 18 months out?
I'm hearing, and the way the options are priced, people are saying that the 10-year yield is going to be closer to 2.5 before it gets to 3.5. But beyond that, it seems to be a lot of unknowns. I mean, bond option volatility and Treasury bond option volatility is very high, but it seems to be pointing to a 2.5 to 2.75 10-year yield within the next 6 months.
Greg's making a face at that one.
Yeah, I mean, you know, this is quasi-Japanese-like, you know, and I think that's one thing I think it's going to start to creep in, and I'll get your comments there, you know, where I worked in Japan in the 80s, and they're still in the same place they were back then. You know, there's been a few lost decades. That's the only thing that creeps in for me, worst case scenario, is just you have a decade of really, really low growth. So.
Yeah, and I think at the end of the day, we might see inflation with deflation. I mean, they can coincide quite nicely, and that will cause the cash markets just to drift.
Yep.
Can we get your thoughts on the European situation as well? Because Bernake spoke about that. He said that financial markets would be roiled by a Greek default. When he talked about the US banks specifically, he said they don't have a lot of exposure to Greece. They do have a lot of exposure to the European banks themselves, or the broader Europeans in Germany and France, etc. Is it on the radar there? Is the Greece story moving the needle much for you?
I mean, we have enormous exposure. I mean, this would cause a worldwide contagion very, very quickly. And I think yesterday's rally at the very end of the day was just people like so glad that the confidence vote did indeed pass. But the fact of the matter is, at some point, Greece is going to have to default. I mean, I don't see any way around it when they have to cut 20% of their public workforce, when they have to privatize every government agency, when they have to lay off workers, when they have to raise taxes. I don't see any way around it. And 40% of their GDP has to be paid back within the next 3 years. So with that in mind, I mean, unless some miracle happens that I'm not looking at, it's going to be disastrous.
What, for markets? But if it's an orderly default, people say that will be okay.
Yes, and I hope that's right. I sure hope you're right, because you look at like Mexico. At first it wasn't orderly, then it became orderly, because at the end of the day, the Mexicans did promote fiscal austerity. They did what they had to do, but they still had to write down some of their debt. So I'm hoping, I'm praying, more than I ever have, that it is an orderly default, because it could be disastrous.
Larry, we've, I guess, become experts on Greek finance overnight. You know, not that we were experts before, but to me, and once again, I've always marveled at European accounting. Isn't the real hit going to be to the French and German banks? And once again, all that debt's at par. It's probably, if you mark to market, be at 50 cents in a dollar, going to 30 cents in a dollar. Your thoughts around the European banks and the Germans and the French banks in particular?
Absolutely, and I think that's why Merkel's been so proactive, especially yesterday, with just giving in and saying we have to provide some funds for these people. Because, I mean, if the French and German banks even had to take a 10% bank haircut on their exposure to Greece, that would be enough to cause, I mean, worldwide contagion instantly. So they have, and I think at the end of the day, I think the Greeks know this, that at the end of the day, the Germans and the French are going to have to come to the rescue, and it's going to impact the average citizen in both Germany and France.
Larry, can I also ask you about, you mentioned the bond markets earlier. Copper futures, the financial sector, and the 10-year bond yield all started turning lower in February. Now, that's before we started getting bad economic data. It was before the S&P 500 index peaked as well. Are any of those leading indicators showing any signs of bottoming out for you?
You know, I think the 10-year bond can be a leading indicator, but right now I think it's acting more like two things. One, it's the ultimate safe haven because no one else knows where to go, and I guess like 3% is better than nothing. And it's also reflecting the fact that now that QE2 is really going to end, no one seems to know who's going to play quarterback right now. Who's going to lead the team? Is it going to be the private sector, or is it going to be the fact that the United States government has to get its act together and get very serious about cutting our deficit?
So what about copper? Can I ask you specifically about that one?
Yes, you can. I love copper. Copper, again, is range-bound. I would love to say the Chinese have been moderate buyers of copper, even in the last week. We've seen LME and Shanghai stocks fall, actually quite dramatically. We saw London Metals Exchange stocks fall by 5,000 tons last week. But I'm not excited to say that we're ready to take off again. It's definitely range-bound between $4 and $4.15 an ounce, a pound, until the Chinese situation gets more clear. Long term, I definitely am bullish on copper, but right now there's these forces where, yeah, the Chinese are buying, but the manufacturers and the end users are living hand to mouth on the copper. So that's why we see reduction in the supply. But until the Chinese economy gets a little bit more tempered, I don't see anything above like $4.15, $4.20 a pound in copper.
Thanks so much, Larry, for today from Chicago. Appreciate that.